What's good, trading family? The gauntlet is loaded, and the tape is dead flat. That is the story. Oil is down 3.42% on the Operation Economic Outcast. De-escalation, read. But Bessent says a major financial institution gets named by end of week, and China is not exempt.
Quick disclaimer. Nothing we say is financial advice. Do your own research and manage your own risk. This is two people talking markets, not telling you what to buy. Tape check. The VIX is 15.84 flat. No fear spike. The SPY and the Qs are dead flat pre-market. West Texas Intermediate crude is down 3.42%. Gold is near $4,696. Bitcoin is green.
That flat tape is a lie, bro. Everyone is standing still, because this week is a minefield. The market sold peace on sanctions, and the overnight tape is already pricing enforcement. That is the fuse.
Walk me through the oil split. The barrel is down hard.
West Texas Intermediate crude is down 3.42%, the biggest drop in 3 weeks. The market read, Operation Economic Outcast is sanctions instead of war, so the war premium left the barrel. But gold is flat, and Bitcoin is green. The debasement bid did not break.
So the peace trade hit crude, but hard assets held. That is the split.
The live wire is Bessent. He says a major financial institution will be sanctioned by end of week. He also says China is explicitly not exempt from the Iran secondary sanctions push.
The reporting is split too. The Wall Street Journal has no one is above sanctions and quiet diplomacy with Chinese banks not named. MarketWatch says China is explicitly not exempt. Those two headlines next to each other are the tension.
That is the fuse. If a Chinese bank gets named into the 7.5% China tariff headline, the de-escalation trade flips. The same tape that sold oil on peace will buy it back on enforcement.
And the overnight tape is already sniffing it. The Hang Seng is down 1.92%, while United States futures are flat.
Asia is pricing the second leg. The oil print is the headline. The China print is the story.
Do you think the market is wrong to sell oil on peace?
Not wrong, just trading the first leg and ignoring the second. The second leg gets priced when the next enforcement headline actually hits. If enforcement hits, the peace trade unwinds fast.
So the crude bounce would be quick, but the bond and gold bid might not break.
Exactly. Gold says the debasement trade is separate from the war premium.
Guardrail, we do not invent bank names. We report Bessent's words as his words.
Locked. A major financial institution by end of week is the fuse. One real source names it. We use it. Otherwise, we say the plan has an escalation event built into its own calendar.
My segment is the utilities tell. Utilities are down 2.17% this week. Healthcare is up 4.58%, and staples are up 3.27%.
That sounds like recession hideout at first.
If you fear recession, you buy utilities. Regulated cash flows, bond-like, boring, but utilities are down. So money is not hiding from recession. It is sorting by rate sensitivity.
Why utilities? They seem safe.
Utilities are the longest duration equity on the board. If you fear a hike, you sell them. Healthcare and staples are up because they do not get punished by the next rate decision.
So this is not rotation into safety. It is a hike trade wearing a rotation costume.
Exactly. And the VIX at 15.84 flat confirms repricing, not panic. I said rotation, not recession last week. The base holds. But hike pricing is the new input. It is not a flip. It is an evolution. The market is doing math on rates, not running scared. The tell is cleaner now. Recession would bid utilities. The market is selling duration instead.
That is why the VIX has not moved. It is math, not fear. Earnings. Dix reports pre-market today. Intuit and Zoom report after the bell.
Tomorrow, Williams, Sonoma, Kohl's, and Abercrombie.
Wednesday after the bell. NVDA, ticker NVDA. That is the only appointment that matters.
7 straight red days for NVIDIA, the worst streak since 22.
Support is near $190. The Qs need 710 to 712 to clear.
The Qs are dead flat today.
So the question is, not, will NVIDIA beat? It is, what does the market need to hear to stop selling?
7 red days have priced a lot of damage. Even a good but not great print could spark a relief rally in the artificial intelligence complex.
That is the gauntlet. One call, and the whole artificial intelligence trade derates or rips.
Economic calendar. Wednesday, United States consumer confidence, consensus 90.3, prior 90.8. Bank of Japan core CP. I prior 2.6%. Germany GDP consensus 0.2%, prior 0.4%.
Germany's other GDP read consensus 0.9%, prior 0.7%.
Thursday is the main event. Core PCE, month-over-month consensus 0.2%, prior 0.1%. Core PCE year-over-year consensus 3.3%, prior 3.3%. GDP consensus 1.5%, prior 1.5%. Durable goods orders consensus 0.5%.
Core durable goods orders, consensus 0.5%, prior 0.7%.
PCE is the first real grade on the fiscal dominance and rate regime trade. Hot PCE means long duration pain. Cool PCE means relief for the bond complex.
Friday Tokyo Core, CPI consensus 1.8%, prior 1.7%. Japan unemployment consensus 2.5%.
Sector board for the week. Healthcare XLV up 4.58%. Consumer staples XLP up 3.27%. Materials XLB up 2.57%.
Laggards are utilities, XLU down 2.17%. Industrials, XLI down 3.93%. Technology, the tech sector down 5.4%.
Money is leaving long duration in tech, moving into healthcare, staples, and materials.
That confirms the duration tell, not risk-off rate repricing.
The leadership is defensive, but only the parts that do not punish you if rates stay high.
Tech down 5.4% is the gauntlet before NVDA.
International overnight. The Nikkei gained 0.5%, Kospi added 0.68%. The Hang Seng dropped 1.92%. Shanghai fell 0.4%.
Europe is shrugging. DAX up 0.34%, FTC up 0.09%, Euro Stoxx 50 up 0.27%.
Dollar yen up 0.18%, euro dollar flat. The dollar index up 0.02%.
The read is simple. Hang Seng is pricing the enforcement leg, while United States futures price the peace leg.
Kiri Trade Watch is benign today. Dollar yen is calm, but Bank of Japan core CPI. Wednesday in Tokyo, CPI Friday matter for yen, carry unwind risk.
China plus Bessent, plus the 7.5% tariff headline, connects back to United States names through the oil split.
If China enforcement ramps, the peace trade in United States futures flips.
Portfolio, hot news. The theme is fiscal dominance, and the bond is the boss. MarketWatch says the 50-year downtrend in yields broke. We are now in a fiscal dominance regime.
6 to 7% deficit, $1 trillion in net interest annually. That is permanent supply, not a cyclical slowdown.
Bessent is talking bond buybacks out of the general account, but he has not bought one yet.
That talk is the bull case for the long end. It is verbal support, not actual buying.
Gold near $4,696 is the market's answer. The debasement bid held while oil bled.
That is the split in asset terms. Oil trades peace, gold trades the balance sheet.
Bull case. If buybacks become real, the long bond can catch a bid.
Bear case, permanent deficits, supply, and inflation risk. PCE, Thursday grades that exact trade.
Second order effect. Long duration equities stay under pressure. Gold stays strong. Oil war premium stays separate.
The fiscal dominance trade started in bonds. Now it is filtering into equity leadership.
Long duration equities are repricing because the risk-free rate itself is unstable.
The bond buyback talk is the only policy offset right now.
But talk is not a purchase. The market will test it.
That is why gold is the cleanest expression. It does not need a buyback to work.
PCE. Thursday will tell us if the inflation leg is alive.
Gut check. I am flat. $9,698 and change. Record 1 and 4.
Cash is a position, bro. You are not trading into NVIDIA or PCE.
Correct. No open positions. My wave trader algo has Marvel, ticker MRVL, with partials banked. One small energy name, NNE, is underwater, but the stop is healthy. That is the only system color.
My TFT algo added Marvel into the semi-weakness Monday. The bracket is active and green.
The Minefield pays us for not stepping on anything.
My paper account holds the energy fund, ticker XLE. Stop and target are set per my system rules.
No ads into a dead tape.
No ads. The thesis stays alive unless the stop says it dies.
No new callouts either side. That is the honest contrast for a Minefield week. Here is what we are watching tomorrow and next.
NVDA print. $190 support. The Q's 710 to 712.
Bessent's bank name by end of week. Watch whether China gets enforced. Thursday, core PCE consensus 0.2% month over month and GDP consensus 1.5%.
My energy fund stop is set. The discipline line.
I stay flat unless the tape gives a real reason.
Keep your risk small and your stop smaller. Trading family, I am out.